Eric Mwathe, Mwathe.com, with the weekend world market analysis for the weekend of August 16th, 2015. Let's take a look at the charts here. We begin by taking a look at the Canadian market, TSX. I think the best way I can summarize this is one number here, which is the recent weekly closing low. If that can hold, that is 14,186. If the market can hold above that number, then that would suggest that it is not breaking down. But if it breaks below the recent weekly closing low, expect lower prices. Right now it's holding above that, which is good. Also keep in mind that the market is testing the RSI level, which has been holding for quite a number of years. As you can see here, it held during this period here in 2013 for those lows. It held here for short-term lows, and then again it held here for these lows here. And we can see here over the last couple of weeks, market seems to be holding above the green line. So I think if the Canadian market weekly RSI can hold above that green line, then that would push the market higher based on support. Otherwise, we have to be aware if we break below 14,186, which is this level here, a break of that level would not be good. It would also suggest that we have broken below the RSI support line here, and that break would suggest that this market, or the Australian market, should be poised to go lower. If we take a look at the Brazilian market, we have 5-year weekly chart. Just want to show you one simple line that has been on my charts for many years. Is that line right there. And here, every time we come off the lows like we did here, so once we broke out here, right there, market went on a nice run from the lows here, had a nice run, as you can see. And since then, every time we reclaim back above the line, the market goes on a multi-month move higher. So throughout all this period, market tends to move higher for a couple of months. And even here, it moved back above the green line, which was good for a couple of weeks higher. So now we are looking like if we can move back above that green line, that would be okay. The market might recover. But the problem is that it looks like it could also break. So it needs to find support as soon as possible and hold above A, this line here, and also B, the green line. So if it breaks below those two lines, then the suggestion here is that this market could be in trouble. But right now I haven't seen it break definitively, so I'm not sure. But it needs to hold back above the green line, and needs to hold on this line if it's gonna do well. The way it's looking right now, it's pointing down. This could be a problem because the more it continues breaking, the more it's not gonna have any chance of a recovery. If we take a look at the London market, two things. It's holding above line number 1, just like we saw in the US, and I'll share that with you, the S&P 500. It's holding above the green line, which has been support during the pullbacks recently. Support here on the green line, recent pullback, double bottom support here during these lows. So it's holding above that, so that's good. And it's also holding RSI support lows line here. So it's holding above those two lines. I think that suggests that even this market can come down a little bit before it can actually break down. So it looks okay in my opinion. I don't see any break there. If we take a look at, let's take a look at the French market on the daily, and the French market also showing support on those two lines. Line number 1, the green line, where it's holding right now, which is good, and also line number 2 connecting RSI lows like that. Both lines are holding. I think that suggests that we should expect this market to bounce. It's also holding around its 50-day moving average, which is another indication of potential to eventually move higher. If we take a look at the DAX, the German market, on a daily chart, we see that it is bouncing off the 200-day moving average, and it's been bouncing on the 200-day moving average for the entire 2015 year, and we seem to be holding above that. That might be a good sign. We also see that it is holding nicely above the line of support where it's been bouncing over the last year or so, and so that's good. And also we are holding the line connecting RSI lows, just like we've seen with other European markets. So as long as those two lines are holding, I would expect that to indicate a market that wants to move higher. The problem here is that if we break those two lines, then we can truly start seeing this market pull back and pull back significantly. Since we haven't seen the break, we have to play the market for a bounce. But if we see the break, we have to respect the break, because that would suggest that this market might be going into a major bear market. But then again, we haven't seen the break, so let's play the bounce for now. If we take a look at the Hong Kong market, just like the other markets we talked about in this analysis, you can see that it's coming back to test this line where it has been bouncing. You can see off the lows here, it bounced on the line. It had uniform activity below the line, back above it for this nice entry here. It went below the line, back above it with uniform activity, which is during these lows, and now we seem to be holding. If we can hold above the green line, I would expect even this market to bounce, which would be in sync with other markets we've been looking at during this analysis. If we take a look at the Russian market on the daily, we can see here lower lows in price on the daily. So while this is taking place, markets making lower lows in price, RSI seems to be improving. So I think that might indicate that over time there might be a snapback move to the upside, as long as that's the case. So really it's very simple here. If it can continue holding on this line, above this line, then it pushes higher, price moves higher. Otherwise, if we break below that line, that is when one might consider this to be a break and might be going lower. For now, I think that looks good in terms of that positive divergence chart. If we take a look at China on the weekly, we can see that on the weekly the Chinese market did finally manage to move its weekly RSI above 50. Remember, we've been drawing two lines on the weekly chart for the Chinese market. Line number 1 right there, connecting RSI lows. This one held, connecting all these lows right there. That's good support. Also, we were testing the 50 level right here. So that 50 level is being tested. Market is back above 50, and I think as long as it's trading above weekly RSI 50, the Chinese market should be looking to go higher. I think that's key. As long as the weekly RSI is above 50, this market is recovering and should be poised to go higher. If we take a look at Japan, and Japan's been trading sideways for quite a while, right there, sideways action. So really there's not much width on the chart, and you can actually see this clearly on the daily RSI, because the RSI is forming a wedge like that. So this market really is in a sideways type of action. At some point down the road, it's either going to break out for another move to new highs, or it's going to break down to start a severe pullback, or at least a meaningful pullback. For now, there's not too much width on this one. Seems to be holding nicely above the 50-day moving average, excuse me, holding nicely on the 50-day moving average. As long as that's the case, we have to give this market the benefit of the doubt. If we take a look at the Australian market, we can see it is back to test this line, which has been support. Every time it comes to this line, for example here during the lows, it bounced off that line, and all these lows I've seen the market recover for a week, couple weeks there. Nice recovery of this level. So if it can hold above that green line, just like the other markets we've seen, it might have a chance to recover. Otherwise, the risk here, and I'll show you that, the risk with the Australian market is that it could actually be signaling a major breakdown. If you take a look at the monthly RSI, and I'm showing you here 34 months, so three years worth of monthly data, and you can see here as of right now we are pushing to fresh 3-year lows. That's a major sell signal. As long as the RSI is trading below to 3-year lows, that's a problem. This month we are seeing the RSI also move below 50, suggesting a big down month, which is why we might already be seeing a 5 to 6% drop this month. But the key here is the RSI moving to 3-year lows. That's not a good sign, and we see that one of the MACDs has already rolled over, and one of the MACDs is trading at 3-year lows. That is a bad sign. So here's a market that doesn't look great because of that setup where the monthly RSI and the monthly MACDs are pushing to 3-year lows. Generally speaking, that's when you see a major bear market begin. And as an example, take a look at the long-term monthly chart for Australian market. The last time it had a major bear market was, of course, late 2007 to early 2009. This was a massive plunge, and you can see here this happened once the RSI, trying to say, once the RSI pushed to 3-year lows, that opened the gates for possibility for a lower move, and that's exactly what happened during that period. So that's a major red flag when you see a market move to 3-year lows on the monthly RSI, and you can see that at the time that also coincides with the RSI moving to fresh 3-year lows here. So by late 2007, early 2008, this market was giving us a major sell signal, and anybody who was paying attention could at least been aware that this could have taken place. So right now, again, go back to the monthly, and the problem here is that on the monthly, this is becoming a little bit of a problem with the RSI now trading to 3-year lows. That's a bad sign if it continues, if it doesn't find support. So that's the risk in this market, is that it could get worse. In fact, let's take a look at one other chart here, major market in the world, which is the Dow. And the Dow also looks to be trading very close to 3-year lows as of right now. So there's risk here that this could get worse in markets if this continues being the case, with the RSI moving to 3-year lows on the Dow, and also the MACDs are pushing to fresh 3-year lows, at least one of the MACDs as far as the Dow is concerned. So that opens, the possibility that this market could actually get worse. It needs to find stability as soon as possible. In fact, for the week, we take a look at the S&P 500. As long as the S&P 500 is holding above 50, this market could bounce. As long as the S&P 500 is holding above the RSI lows line, just like the other markets we've seen, as long as this line is holding, that's good. So that's the case. Now let's take a look at one more, which is the South African market. And here we see another world market that is already trading at fresh 3-year monthly RSI lows. So this is becoming a problem. I'm seeing this starting to creep up, and this suggests to me that we might actually have seen the highs in some of these markets. So that's a major break in the South African market, and we see that one of the MACDs is already trading at fresh 3-year lows. So yeah, you might not be trading the South African market, I get that, but once you start seeing many markets doing this type of break, the suggestion is that this could actually move into other markets, and we could have a worldwide bear market coming at any point, but I think more than likely towards the end of this year, if not now, but towards the end of this year. But definitely 2016 is becoming, to me, more and more like a down year, just because by the time we get to 2016, so let me show you why I'm saying that. By the time we get 2016, this is S&P 500 monthly. By the time we get to next year, it's going to be very easy for this market to push to 3-year lows. So right now we are working off this monthly low, but by next year it would be very easy for the SPX to trade at fresh 3-year lows. Keep in mind, one of the MACDs for the S&P 500 is already trading at or is close to fresh 3-year lows. So there's a risk, I think, as we go into the later part of this year and early next, that this market could run into some major trouble and go into a major bear market. Eric Muad with Muad.com, not trying to be bearish, but just showing you what the charts are saying. All right, I am out. Peace and blessings. Yeah.